And it's time to talk personal finance, thanks to our partners Forsyth Barr. Of course, a lot of instability in the Middle East over the last week or last 12 days, as Donald Trump keeps pointing out. There has been a ceasefire decreed, and so far it is holding in the last few hours while we've been on air. Price of oil is coming down. The stock market back up over in the United States. So what does all this mean for our finances and for our investments? Mark Richardson is an investment advisor at Forsyth Barr and is with us on the desk this morning. Good morning.
Yeah, I suppose with the topic this morning, Ryan, I was hoping to turn up and it was all doom and gloom and we're headed for a recession. But it's been good news overnight.
Yeah, you weren't hoping that, by the way.
No, I wasn't. No, but sort of a topic is around that, isn't it? When you are worried about. But the market in general, I think, regardless of what's been going on in the Middle East, there's been trouble in the Middle East and instability there for years, hasn't there?
Yeah.
And the market's sort of maybe skipped a heartbeat at best over this last one, and it's up again overnight, which is fantastic. But I think in general over the year with various policies and geopolitical tensions and trade policies and the likes, the market has been a little bit spooked by the possibility of recessionary times. And there has been, just a small whiff of maybe even stagflation. And if that does eventuate, what do you do with your portfolio? What are the types of holdings that you look to move into or look to focus on that can protect you in those times, which is sort of what I want to talk about this morning.
Yeah, which is, well, funny you mention stagflation and mention, which is where you have low growth, no growth and high inflation.
Worst of two worlds, inflation and low growth.
Double-edged sword.
Yeah.
The Fed was talking in their update this week about, inflation increasing in the US and growth forecasts coming back a bit. So it's not out of the realms of possibility.
So what do you look for in those circumstances and where you want to put your money? Because I don't want people sort of trying to get out of the market, because that's a 2.5-pronged question. When do you get out? Then when do you get back in? And the other half a question is, what is the currency done in the meantime? And those are questions that no one really can answer particularly well. So we want people to stay in. Where would you maybe start to position and massage your portfolio towards? Well, you look for companies that the price is inelastic, the demand is inelastic. So things that we have to have and will continue to have them. Or you want companies that when inflation's going up a little bit, they just stick their prices up and then we can do diddly squat about it. I love power companies, right?
Yeah.
So you tend to look for those. So you're looking for consumer staples type companies in that industry. You're looking for utilities,
healthcare?
Healthcare, utilities, infrastructure. The good thing about utilities and infrastructure, that's where the NZX, our own NZX, can be quite resilient because it is quite heavily weighted with those types of companies.
How do you spot a consumer staple? I suppose it's like toothpaste, stuff that you use every day?
Yeah, pretty much stuff that you use every day, stuff that you need, food. The other thing you start to move into, you look for, say, precious metals. Gold has gone up about 45% in the last year. It's seen as a safe haven. It's also because volatility creates volatility in the world's major currencies. There's been a bit of that in the US dollar. So what happens is reserve banks around the world start to buy up gold because it's quite protected from that. So that's created, obviously, reduced supply of precious metals. So up goes the price as well. You want to be careful with things and other commodities like agricultural products, because they obviously feed into the consumer staples, the things that we need, like food, wheat, or that type of stuff.
And those prices have been going up lately because, well, not only have our farmers noticed, but we have too, right, with butter.
Yeah, and we're doing a lot of bitching and moaning, but we're still buying it.
Yeah, because we have to.
Yeah, so perhaps own the companies.
Great advice, Mark. Good to see you as always. It's Mark Richardson, investment advisor at Forsyth Barr.